Welcome to today's market report.
European stocks ended flat on Tuesday, with miners, banks and luxury stocks leading declines as optimism over cooling US inflation growth in August proved to be short-lived. The region-wide Stoxx 600 index inched 0.01% lower, with the basic resources sector index dropping 1.9% and the banks sliding 1.1%. Having got off to a positive start yesterday, today's price action looks set to follow the pattern of last week, where after a similar Monday rally, sentiment deteriorated as concerns about profit margins in the face of rising prices saw certain sectors come under further pressure, according to CMC Markets. Luxury stocks, including LVMH, Kering, Richemont and Burberry, fell between 1.9% and 3%, tracking moves in Asia on concerns about the spread of COVID-19 cases in China. Ongoing China coronavirus concerns and lockdowns in several cities in Fujian are not helping sentiment, according to Mirabaud Securities. Home to many luxury names, France's CAC 40 fell 0.4%, while the UK's minor-heavy FTSE 100 shed 0.5%. Many strategists expect European equities to outperform this year due to relatively high rate of vaccinations and catch-up trade in cheaper segments of the market, such as banks and energy. Data earlier in the day showed underlying US consumer prices increased at their slowest pace in 6 months in August, suggesting that inflation had probably peaked, though it could remain high for a while amid persistent supply constraints. The report supported sentiment for a brief while in midday trading, as investors were hopeful that US Federal Reserve would likely delay its announcement of cutting back monetary stimulus. While we initially saw markets spike on the prospect of a more patient Federal Reserve, we have since seen traders realize that today's data is unlikely to push the Fed to change course, according to IG. Pandora, the world's largest jewelry maker, rose 6.8% after it boosted its earnings target for the coming years and lifted its share buyback plan. JD Sports Fashion jumped 9.7% after it reported a record first half profit as lockdowns eased and people visited its shops in Britain. Dutch specialty chemicals maker DSM hit a record high after it said it was weighing the sale of its materials division. The crude oil WTI was down 0.08% at $70.69 per barrel. The Brent oil futures was up 0.07% at $73.93 per barrel. Gold futures was down 0.03% at $1,805.95 per ounce. On the FX front, GBP/USD bears take a breather around 138 to kickstart Wednesday's Asian session following a volatile day that refreshed monthly high before marking the heaviest daily fall in 5 weeks. The cable chaired the broad US dollar weakness ahead of the US CPI data before the market's rush to risk safety blustered the greenback. It's worth noting that the quote fails to respond much to the latest UK employment figures. UK job numbers came in mixed, with the unemployment rate matching the expected weakness to 4.6% during the 3 months to July versus 4.7% prior. However, the claimant count change came in a bit higher than the forecast of minus 71.7,000 to minus 58.6,000 in August versus minus 7.8,000 previous readouts. Further, average earnings excluding bonus matched the softer forecast of 6.8%. As the UK employment figures aren't so sore, hawks among the Bank of England policymakers have got a chance to reiterate the bullish bias, as the British government is up for booster shots and one vaccine dose to 12 to 15-year-olds, not to forget easing travel rules for winter. Even so, fears of a third COVID wave in the UK and another lockdown challenge the cable bulls, as the death toll rose to 185, while the daily infections eased to 26,628. Euro-dollar is trading at 118 into the close on Wall Street and flat on the day, within a 45 pip range between 118 and 118.45. The dollar fell against the major currencies, trading at 92.601, moving away from a more than a 2-week high on Monday, based on the less than expected inflation data.
This is today's market news. Thanks for listening. We'll see you next time.